Hi, it's me back again. We are just in front of our last part of the day where we're going to be actually, I think all of us are excited or looking forward to what the future brings. So we're going to anticipate a little bit what's going to happen in the with financial services in the future. And I would like to start with introducing someone who's going to share a really interesting keynote about the unbundling of the financial services industry. And I would like to welcome Panagiotis Kriaris from Unzer. He is the head of business development there. Unzer is a modular platform for international payment transactions. The modules which cover actually the entire spectrum of payment management, from processing of various payment types through automated analytics of customer behavior and requirements, basically all the way up to integrative risk management. Panagiotis is joining us from Vienna, and his work has been all about innovation, digitization, customer experience, partnerships, and business development recently. So I think, yeah, you're here already. Hello, hi. So I would just hand it over to you, and I'm out.
Thank you very much. Thank you for having me. It's a great pleasure to be here. Let me share my screen. I think you can now see my screen, right?
Yes.
Yes.
So basically, today we're going to talk about the unbundling of financial services. And actually, this is a story of change. It's a story of change, how financial services have been changing over the years, and how they are continue to change as of today. And I mean, if you ask any good consultant what this change is about, I think they will focus on one thing, and this is probably the value chain. So if we look at the value chain as of today, we will see that there is one key change happening, focusing on two things. One of them has to do with technology. The other one has to do with the mobile phone, I would say, being at the center of the attention. So this is the evolution of customer services. And around we have technologies and data. Data is something that we find in the background. We don't see it here, but I would say data is playing a crucial role. And the thing is that the disruption is happening. All this disruption is changing the things as we know them today. Because of, I mean, if we would have to summarize, I would say because of mainly four factors. On the one hand side, as I just mentioned, we have the new technologies. On the other hand side, we have continuously changing customer expectations. There's a lot of discussion about the customer experience lately, and I would say that this is one of the main things that we see. And on top of this, we have open banking. For example, we have PSD2 in Europe. We're going to discuss about this in more detail in the next few minutes. And we also have the rise of new players, fintechs, or the so-called big techs. So we are also going to see what is the role that they are playing. But since we talked about change, and since we said that we are going to focus on unbundling, I would just like to have to look at the big picture and try to see. I mean, if I had to categorize the changes happening in financial services today, I would say that we have unbundling, and I will come to this in a moment. But on top, I mean, this is only one of the changes. So we also have the so-called disintermediation, meaning that you have customers being able to access financial services and products through different channels and different players. And this is in contrast to what was happening before. Then you have the commodity versus experience question. I mean, in the past year, there was a discussion around, okay, is financial services becoming commodity or not? And I think all the successful players will tell you that they are trying to position their products not on the commodity side, but on the experience side. Because the more that you are positioning your product and your services on the experience side, the more it means that you are selling a unique product and you're adding value. And the other thing is invincibility. So basically, the financial products and services are running now in the background, meaning that sometimes the provider doesn't have a direct contact with the end client, let's say, and this is changing how things are working. And coming to the unbundling, I think that's a notion which is not difficult to explain, but basically it has to do with financial products and services moving from a model whereby one traditional player or one bank or one incumbent was offering everything to a model where you can choose and cherry pick different products and services from different players. And that's the so-called unbundling. I mean, and what's a better? We usually say that one picture is a thousand words, and this is probably one of the best illustrations of what this means. So you have so many players and so many the so-called fintechs replacing with niche products and niche offerings what used to be a central offering from a main player, that I think it's not easy to even kind of monitor what's happening on the market nowadays. If we take a less confusing example, using, for example, one of the big players in the US as a use case, we can see, for example, we can see Bank of America, and we can kind of, let's say, categorize the so-called unbundling in different segments. And this is actually involving everything. So it goes from consumer payments to deposits, to lending, to credit cards, to investment banking, to business banking, wealth management, you name it. All the segments are here. I spoke before about the fintechs, and I think it makes sense if we kind of try to look and compare the evolution over the past years. So let's take, and that's a very good graph. Let's take the evolution happening over the over the last 12 years, not last 12 years, but we are comparing 2005 with 2017. And this actually, by the way, this is Europe. So what we see happening is that we see that we have less players competing in the financial services arena, but many or some of them, or at least a very good portion of them, 20%, are the so-called fintechs. So these are the new players offering niche products and services, focusing on the customer experience, and they have been making their presence very loud, I would say, over the past 10 years. And if we look at what's happening globally, I think we see the same or similar picture. So depending, I mean, we have a global average of 17%, meaning that on an average basis, 17% of the players in financial services globally are fintechs. And we can see, I mean, we said that in Europe it's 20%, but we can see variations. For example, in the UK, it's 63%, or it used to be 63% a few years ago. In Canada, 47%. So we see huge variations. But for me, the bottom line is that they are, or they have changed the name of the game in a very significant way, and we're going to see how this was the case. One of the main reasons why this was happening are the so-called APIs, and think of the APIs as a translator. When people, let's say that we have two people trying to talk and they don't speak the same language, so think of the API as the connection point between the interface, let's say, between two languages. So they are connecting to different technologies. And the APIs have played a crucial role in the change of happening in the financial services. This is a graph showcasing the evolution over the past, over more than a decade. And I would say, I don't have the numbers for the past few years, but I would say that this has been in the same direction, rising dramatically. And APIs, I mean, I explained what APIs are before, but I would like to underline the fact that despite the fact that APIs have been having such a dramatical impact on financial services, they are basically an old technology. And if you think of the analogy with different industries, you are going to find very many well-known examples. I mean, from Netflix to Amazon to Expedia to Salesforce. So these are industries, traveling, CRM technology, media that have been disrupted through APIs. So that's to put things into perspective. And I think this is important. I mean, the APIs, as we said, are having a very big impact on financial services as we speak. And I would like to mention a couple of. I would like to mention actually two very important examples that we will be hearing all the more as we go along. And actually, this is banking as a service and this is banking as a platform. Both are enabled through the APIs. So banking as a service is the concept whereby every player can offer financial services products through integration. So I'm basically getting the infrastructure from somebody else, be it a bank, and I'm able to offer this. So this is changing the game. And this is the famous quote that every company can be a fintech company. And banking as a platform is the famous platformification of the financial services. And I would say that if we had to compare with what is the banking as a service, is the inverse. So basically, I'm getting services. I am still the platform offering the services, but I am integrating these services from different fintechs outside of my ecosystem. Let's put it like this. So these are again, these are the two different options of the same coin, if you would like. Which brings us to the point where we say, okay, we explain how things are changing, how the whole ecosystem, how the whole industry has been changing. So I think it goes without saying that we have a new battleground. And on the one hand side, we have new players. So we have the incumbents. So we have the traditional players that are still in the industry. We have the so-called fintechs. For example, one very good example are the neobanks that have been multiplying over the past years. And of course, you have the big techs that have made their presence in financial services very loud, I would say, over the past years. And I mean, the axis of this new background is focusing on four topics. As we said before, one of them is the customer centricity and the personalization. The other one is how many products and services you are having. Are you focusing on a niche market, or are you offering, let's say, are you offering this platform economy model? Open banking and ecosystems. This is what we are going to explain in a while. And of course, the traditional banking capabilities, because some of these capabilities are not changing, but actually what is changing is how these are being offered and by whom. And talking about platforms, and for me, this is a very interesting comparison in a decade. So let's take 2010 and 2020. So here we see the top 10 financial institution providers in terms of valuation. So if we take the picture as it was 10 years ago, you will only see traditional players. Nowadays, or let's say a year ago, 2020, half of them, so 50%, are actually platforms. They follow the platform model. Visa, Mastercard, PayPal, and Tencent. These are names that were not on the list, at least on the top 10 years ago. So this is speaking volumes about how the financial services industry has changed and how this will be changing. Because if you have half of the top 10 players following a very specific model, which is the platform model, I think this is showing a very clear direction. And of course, we can say with certainty that this has been a success at least up to now. And if we go on the other end, we find the big tech, and we find that they increasingly offer or focus on offering financial services products. So if you take all the well-known names from Google to Apple to Facebook to names in China like Baidu or Alibaba or JD or Tencent, you will see that there is a specific trend or focus on offering one or more banking services. Of course, I would say that payments, you will see that payments is the core one, so it's usually the starting point. But even this has been the initial offering, I would say, or the entry point for most of them. This is for sure not the end. So we continuously see all these big players focusing and trying to add additional functionalities, which is in line with this platform approach that I mentioned before. And this is again very interesting in terms of the implications, both for them and as well for as well as the existing players and incumbents, and the strategy and how they are trying to face this invasion, if you would have it as called as an invasion. So I think it's fair to say that we have a new ecosystem with many different players. We made the reference before. So we have the fintechs, insurance companies, banks, neobanks. I would say that the traditional banks are not anymore at the center of this. So I would a bit change this schema. But what I would keep here is that we have a list. We have a list of many players trying to cover sometimes services and products that are the same. So they're competing with each other. So they are invading each other's turf, if you would like. And at the end of the day, the customer has to make a decision. And for me, it's interesting if we see the competition, we see the technology, we see the regulation, we see the customer demand, but there is one force that is at the center of all what's happening. And this is the open banking. I think this is what I tried to explain before, but I think it makes sense if we try to focus a bit more on what is open banking and how this is changing or enabling, let's say, some of the changes happening in financial services, like the unbundling that we discussed before. So open banking is a global phenomenon. So it's not only a phenomenon happening in Europe or in the UK or in the US. And I don't want to get into details around how this has been implemented in the various places around the globe. But if we have to define this, I would say that open banking is all about access to information, so access to data. And what do you do with this data? And basically, the important thing here is that you are in a position to build on top of the data and to create innovation. So, so basically, we are. It's all about access to data that was not visible before and how you use this data. And there were different approaches. As I said, it's not the point of this discussion to focus on what has been the case, but some of them have been taking place because of regulation. Best case example, the EU, and in some cases you have a more liberal approach to the market, like for example in the USA. And the thing that we have to keep again is the innovation and how this is changing the way that players are building products and services on top of information. That's the key thing. And speaking about open banking, I think most of us are familiar with using a lot of these fintech services or apps, glossy apps, let's say, that have been developed over the past years, which are focusing on the customer experience. But I'm not sure how many of us have realized that we have, let's say, one layer, which is the so-called front layer with all these players that we know. And then there is one layer which is acting in the background. And these are players enabling basically the fintech revolution happening. The best case example is probably Blade, a player in the US. I think that most of you or some of you should have heard the story which says that, Visa tried to buy Plaid a few months ago in November 2020. Back then, the valuation was around 5 billion. It failed for different reasons. And today we have, I think they have a valuation of 13.4 billion, if I'm not mistaken. So in a few months' time, they have more than doubled their valuation. Why? Because they are making things happen. Without this kind of companies, and here you can see a picture of several players around the globe, they are basically enabling with the infrastructure and with connecting the APIs in the background, enabling all this innovation from the fintechs happening. And this is why companies like Plaid have managed to more than double their valuation within a few months' time. So I think that's an interesting point around open banking and around the various aspects that the concept of open banking brings to the table. And of course, speaking about the aspects, I think we will see that we have a different or new business models. We have discussed about the platform approach. I mean, we have seen that most of the big players today are following this approach in a very successful way. We can have different models. For example, other players are focusing on the product side. You have traditional incumbents trying to focus on in-house products, or some other players trying to build or to combine market capabilities with own offerings. The key takeaway for me in this one is to say that open banking has been enabling new business models and new revenue streams, and that's I think probably what we need to keep here. And because of the fact that we have these new business models on the one hand side, we have new players. At some point, there is either a collusion between these players, or there is a partnership. And so you have, I mean, if you take the whole space, you have different approaches, and you have different players taking these different approaches, and they start from a defense mode. So I'm an incumbent. I try to defend my turf, and I try to either build my capabilities, or to source them, or to maybe do some partnerships. Maybe I can try to white label some of the services that fintechs are providing, or and that's I can attack. I can buy some companies, or I try to acquire some infrastructure that is difficult for me to build from scratch in a year's time or in a few months' time. So there is a very big range of factions that is happening, and this is why I think the fintechs or the payment space has been one of the most interesting ones to watch over the past years in terms of what's happening. So there is no month that passes without a new acquisition or a new trade happening in this space. So coming back, I mean, if we want to summarize all these things, we talk about the way that the traditional model was working through bundling all the products by one provider. We have discussed about the unbundling, so how we have reached this point. And I think it's interesting to actually discuss if we have a rebundling happening at the moment or not. And I would say that taking the example of the music industry can be a very good use case to understand the background and also to understand the direction that things can be moving into. So if you take the music industry, you will see that in the old days, you had these albums. So if you wanted to hear music, you had to buy an album with all in the form of a CD. So, but you had to buy all the songs basically. And then we move to this streaming. So you can choose what you want to hear, or what you want to buy. And that's a direct analogy and one-to-one analogy with what is happening in terms of rebundling in this in the fintech space and in the financial services space, because on the one hand side, I would say it's good if we give the opportunity to customers to be able to choose services from different providers. But I think we've reached to a point where this is becoming a bit confusing, and customers are sometimes a bit in a loss what they should be choosing and what kind of service is this, A, B, C, or D. So what we see, and I think this is a good example of a provider, is a trend of, this is the so-called super app trend. So we see that we have one, let's say, access point, which is trying to bring together a best of breed series of products so that the customers know and access from a single point different services. And this sometimes can go beyond financial services. So it can be, of course, financial services products, but it can go as far as insurance, for example, or it can go as far as transport. I mean, in Asia, we have many examples of players that have started off from one use case and are now expanding into this space. So this is the so-called super app game, and this is actually the reason why we are having this. So as I said before, some people are now confused or at a loss at what's happening, and they find this as a useful business model so that they can access services which they know are best of breed through one single entry point. So we will be following. I think this is a trend that will be happening all the more relevant as we continue in the future, and it will be very interesting to follow. And as a last point, I would say that in the same direction, we don't see this happening only in Asia or in cases, for example, like Tinkoff that I mentioned, but we see other players like Amazon, big players, or like PayPal, for example, trying to rebundle on their side products that traditionally were offered by other players and bring them under one roof. I would say that this is maybe an additional example of this rebundling approach happening in financial services, which is interesting to watch. That's all. Hopefully this was interesting. Happy to discuss this further.
Thank you so much, Panagiotis. It was super interesting, very informative presentation. I would then invite our two remaining panelists to join you. So please stick with us. And we're gonna have Christian Zeiler-Muñiz, who's right now based in London. He's the general manager for Europe at Luno. Luno is the global leader in crypto for the mass market. And actually, I've been researching a little bit of what's going on with Luno, and I found a really interesting fact that fits our, I think, topic and in general, the conference a lot, that almost 70% of Luno's users are from Africa. And right now you have around 7 million. So maybe Christian can clarify that if I made a mistake here, but I'm pretty sure it should be correct. So Christian's experience actually is really interesting because before joining Luno, he headed innovation at Generali and led multiple finance and technology associations. He also worked at Credit Suisse in Zurich and in Hong Kong. So he comes from a really, legacy environment and made a huge leap directly to crypto, also skipping the steps in between. Very exciting career-wise. And on the other hand, we also have Peter Mondovics, who's joining us today from Budapest. He's called Mondi for colleagues and friends, and he's the marketing leader responsible for e-commerce, added value payment solutions, and digital platforms at Mastercard Hungary. And Peter has over 20 years experience with multinational companies. He's specialized in marketing strategy, digital marketing, CRM and loyalty, and so on. Currently, he's busy working on digital transformation projects for banks and merchants specializing in UX and service design. And if we're lucky, and we are, you can see that he's operating from almost a music studio. But before you start, and Akos will be your moderator, I would like to remind our audience that we will do a little networking session in the super exciting tool that we will share the link to. It's actually right now behind me. You will see it later on. We will also include it in the chat. So please, after we finish up, if you have time, go there. And now I hand it over to Akos.
Thank you very much, Fabiola, and thank you, Monday, Panagiotis, and Christian for joining us today for pretty much the last point of business of our conference today. And I think everyone in the audience is already full of ideas, and I'm really happy that this is the topic that we are using for the closing, because I think this can be really inspirational. That after a lot of transformational topics and a lot of problems that financial companies are facing during these times, we can about futures of the financial industries. And what I would like to start this discussion with is that we are talking also from the talk of Panagiotis, and in general we are talking a lot when it comes to financial futures about the technology. We talk a little bit about the changing customer experiences. These are topics that come up a lot. But do you think that that the business models of the financial industry are also changing or vulnerable at the moment?
I think what is constant is the change, and what arises is the speed of the change. What is happening now is that this phenomenon of digital adaptation has sped up, so the speed of the digital adaptation has increased, and I think some banks had problems with keeping the pace. So we arrived at the stage in like 2-3 years ago, and the customer expectations have changed. Digitalization was there, plus open banking was introduced. There were a lot of new players on the market. And basically where we ended up is that these banks were operating legacy systems, which were very hard to develop or improve, basically the UX and basically the capabilities of these systems. And they started to recognize that on a long run, if they don't do something, they can become a commodity or a background system for these financial services, for the fintechs, basically. And the problem here was that basically it was touching also the core services of the banks, because we are coming from transactional business, but it's significantly true for the banks, because there we can talk about loans, for example. There are services outside which can use for the credit scoring, for example, the bank's transactional data, but they can operate the whole service from outside. So what I liked in Panagiotis' presentation is this unbundling concept, because this is what is happening today. There are a lot of unbundled services, and basically those players who are very successful on the market, what they do is that they provide excellent UX with services which do exist, but they can bundle these services and basically build a new service. And it's from one side, it's very dangerous for the banks. From the other side, the banks can control in some extent these services because they have the customers today. And in Hungary, we did the research, and there was one thing or one insight which came out from the research, and this is what I like the most, that it's much, actually you will get divorced much earlier than you change a bank. So to change a bank is almost impossible in Hungary. So as far, I think, as a bank can keep up the pace and basically integrate services, they can be successful.
Christian, what do you think about this topic? Because you are coming from a very different background, from a very challenger industry, and from a technological point of view, very challenger industry.
Yeah, no, definitely. I think a lot of what was just shared resonates a lot with me in terms of the vulnerability of the space. I do think there's a huge challenge with all the incumbents, essentially, in financial services, be it insurance, banking, and different financial service providers, just be extremely slow. And also, in the topic of today, just lacking agility in general. I think a huge driver of that is, as Molly just to share it, is the IT infrastructure. So the core infrastructure, the backend, is so entangled with everything from the back to the top layers, in a spaghetti way of connections, that it's impossible to plug in anything that's new. And the second part of it is probably the cultural organizational aspect. So companies are just not structured generally to actually respond to anything that's coming from customers or from the market. And so I think that's extremely hard. So in our case, we are still a pretty small company now, 400 people, and it's similar to all of challenger banks, fintechs. It's just a very different setup where you don't have those two limitations. So you're starting from scratch with a state-of-the-art infrastructure where everything is plug and play and super modular in terms of APIs. And culturally, just it's very differently built, right? It's all people that have very different mindset. It's agile from the ground up, the entire organization, and allows for very different responsive planning procedures. And I think we are specifically in an industry where we don't have seasonality, but we have a crazy impact on the business, be it on the customer support side, on onboarding, on our transaction systems based on price. So when the price goes crazy, people go crazy about crypto. And we were adding about 1 million customers per month, per every 2 months at the moment. But this is a number that changes drastically up or down, depending on prices. So when prices go crazy,
depending on Reddit.
Yeah, that's hundreds of thousands of people signing up in a day or in a couple of days, and so we have to cope with that. And that's just something that is impossible to build for these kind of scenarios, and then also change certain behaviors of the platform in a legacy infrastructure and in a legacy kind of organization. So it's completely built because of that pressure from the environment of needing to be hyper adaptable. The whole organization, whole infrastructure is built to kind of respond to changes within kind of weeks rather than years.
Mm-hmm. And from an unbundling point of view and from a payment point of view, Panagiotis, what do you think about these changes?
Look, for me, there is one key thing, and I think this is the following. You don't have to own all the products or all the services that you offer today. So you don't have to build everything from scratch. And I think that's a key factor. That's a game changer for traditional players to understand. This is what the new players have been doing, because you mentioned the business models. So if you wait, for example, to build something that is popular on the market today, you probably have to wait for a couple of years, meaning that you have missed the market. So I mentioned before in my presentation that there are different, there is a range of different approaches in terms of how you face change. So one move that you can do is that you try to do anything on your own, everything on your own, or you can try to partner, or you can try to experiment. And experiment means that you might be able, for example, to integrate some services or to rent some services to test, to see that if they are suitable for your business model and for what you want to do. And then it's a different discussion from this point onwards. I think that's a key change, which is applicable to both sides. And for me, it's a question about adapting. If you don't, if you're not in a position to understand that this is the case today, I think you are not going to be able to survive. So that's a key thing for me.
I would have a follow-up because from the answers you gave, I see a little bit of a tension about describing the financial industry and the possible futures of the financial industry. Because on one hand, basically we have the banks and the traditional players who are still owning the customer relationship, and basically, yes, it's easier to get a divorce than to get rid of your bank. While at the same time, a lot of financial innovator companies are challenging that ownership of the traditional incumbent players of the customer experience. So that's also one of the threats that are coming from open banking, that basically new customer experiences can be built on top of the services or the utilities of the bank or the traditional financial players. What is stronger? Which one is stronger? That banks still have the relationships as a trend, or is it stronger that customer experience and the ownership of that customer experience can be stolen away from them?
I mean, I have a very clear view, like again, like comparing very extremely like the traditional world. I think there's still, it's hard to tell how long it takes and how quickly these things accelerate, but it's very clear that there is fundamental shifts already happening in terms of moving over. And I do think there's like a presentation that from the keynote that Panagiotis gave, I think there is this rebundling happening in various ways. And so we see, I think TransferWise, or like now Wise, is a great example of like starting off with one very good service a lot of people start using for one use case, but then adding a card, adding accounts, and so on and so on. And so you might still have your bank first, but you start using one service that's really good, but then you get kind of like on these other services. And the other thing that's happening on kind of like rebundling, I think also with Wise, the other way around, like in the UK, we have a challenger bank called Monzo that's quite popular. And they actually basically, rather than building kind of like an international settlement or like a peer-to-peer payment system, they actually integrated TransferWise in there. So now Wise. I think there will be like these things that challenger banks will add on. Having said that, I guess like the willingness to change an account is still super low. But I do think that is changing. So one thing is like we have like every year all the new 18-year-olds that choose their first bank, and that's probably driving a lot of like who is kind of like with a challenger bank versus with a big incumbent. And I think there it's very clear how the split goes. But I do think there will be more and more also a move over. And I do think that number I would expect to change in terms of how unlikely you are to change your bank, that will also change over time. That would be like my hypothesis.
So you think that basically this position of the traditional players as the owners of the customer relationship can be challenged by newcomers?
Yeah, I think so.
I think this is not a safe position in any case. I mean, you cannot rely on what has been the case in the past. And for me, this could be the most concerning notion, let's say, for somebody who is an existing player to say that I have the relationship. Because as I said before, what we see is that we see customers wanting a better service. And at the end of the day, it's about who has the customer relationship, which is also connected to the customer experience. So, and the thing is that, as I said before, the financial services are moving in the background. So they are becoming invisible. So for example, there is a payment happening, but you don't realize who is offering the service. Take, for example, the buy now, pay later services. You are checking out, you're buying a product. Something is happening in the background. There is a provider, but you don't know you potentially don't know who this provider is. All you see is the platform that is offering the product. And actually, this is the relationship. So in the background, you might have traditional players, but they are losing the customer relationship because they are sitting at the back seat. This is also what's happening with the big tech. And this is the main concern. They are having so much data, and they are having, let's say, so much information around the customer And that's why they, as we've seen before, they are trying to offer different services without them trying to replace the banks. In most of the cases, they are working with banks. Why? Because they don't care who is offering the service. They have the customer relationship. The customer thinks and sees them, and that's the important thing. So that's the main danger, that at some point these players might become irrelevant and might lose a lot of negotiating power because they don't have this one-to-one relationship with the customer, meaning that they are replaceable.
From a payment provider, Mondi, I wanted to pass it to you because you are coming from a larger payment provider.
One of the possible outcomes for those banks who are not integrating new services is that they will really act as a background service. So if I want to enter the whole ecosystem, then this is the entry point, but this is full stop. So it doesn't bring profitability for the banks. So the big question will be if this service is sustainable on a long run. It doesn't add value. So someone will manage my current account and full stop. This is not a profitable business. I think there is a way that the banks can act as an integrator. And I will give you an example. So in the past years, we saw some signs that, for example, telco companies wanted to enter the payment area. So they issued cards, they run some financial services. Basically, one opportunity in the open banking is a very similar phenomenon that, for example, a merchant can provide financial services. The merchant can provide value-added services based on the financial information coming from my bank. And this can transform the whole ecosystem dramatically because the merchant can own the relationship because they have customers. They have the freedom to actually bundle services which do exist on the market, and they can have access to my current account. So I think that's why it's important to see that most banks will most probably go into this integrator direction, because then they will be able to provide similar services to the banks as they did in the past with, for example, with the co-branded card. And basically they can integrate all those fintech services which are relevant for their customers. And actually, with this, they can also improve, and this is the third leg of this equation, improve the UX, where I think they are pretty much behind the fintechs. Yeah.
These are all really, really interesting viewpoints. What it reminds me a lot is actually, I don't know if you ran into Brett King's books, and specifically he has a book called Bank 4.0, which is about this whole phenomenon or this forking path of banks. As on one hand, banks either can become a backend service that is driving the technology of the ecosystem, while other companies are going to be providing the utilities of the banking, or they are becoming an integrator on the market with trying to become less financial players and more customer experience players in the market. And if we are thinking about it, this whole APIs and open banking and even crypto, these are opening up a lot of technological opportunities. What do you think are the most important trends to be watching out for that are going to be, in your opinion, shaping the face of finances in the future? Like there are a couple of buzzwords, but it would be interesting to see your opinion, like what are the most important ones that are going to be.
I think the personalization of services and a dynamic service personalization. So for example, crypto is a perfect example. I'm not into the crypto business, but my colleague is pretty much into the crypto business. He will demand this kind of services from their banks. And basically the bank have one single application. So let's say that this application will represent the bank for me. If I will find relevant services there, which are personalized for me, I will be okay with that one, because I don't want to use any third-party applications. I don't want to use any other bank's applications. I want to have it as a financial advisor and assistant in my phone, right? So, so I think it's one of the biggest challenges actually in the banking sector, how to personalize, because traditionally, as most of the companies were working in silos, most of the banks did the same. So I will give you a very good example. This is, I think it will describe it very perfectly. We have a partner who have 34 different departments for 34 different products. How do you manage 34 different departments' products in one application? And basically, you provide the same application for everyone, right? In many cases, it's a failure. So you can't, and people don't like the application. So I think the relevance, personalization, and UXs are the main trends which we should be aware of in the future.
I mean, the other thing I can quickly talk about, kind of like the crypto aspect and like my view, because like that's obviously like where I'm at the moment. So I like overall, again, there's like a lot of overhyping, like crypto will change the world. I think there's like, I think three things I think are quite interesting to look into. And like one is Bitcoin specific as an asset class is definitely something that has evolved, especially over the last 12 months. I think that's it very much here to stay. So like all the big financial institutions have like gradually coming in. That's just like one asset class that has evolved. And actually I just got back a report that we're doing in the US, a big kind of market study. And what we see is a preference of like investing in Bitcoin over like really like stocks, bonds, cash, gold, and so on. That preference is growing quite fast. So especially if you look at like, I mean, teenagers, so 18 to 20-year-olds, they already have like a preference, like in a lot of cases of like 30% or so. And that has been growing like massively over the last couple of years from like 0, 5, 10 to like 30%. So as an asset class, it's a valid thing. But again, like that doesn't really change so much of my banking experience. And the second thing is where we see a lot of signals like piling up is an international cross-border payment. So as long as you're in one country and in one currency, there's a lot of like user experience stuff that's interesting. If you go international, like be it merchant use cases, peer-to-peer, there's a lot of stuff that's really hard to solve in traditional systems. And it's not going to be Bitcoin there most likely, but the likes of USDC today, or like stable coins in a currency that's widely accepted, or like if Facebook and DM and the whole association, if they come up with a very international stable coin, that's the kind of stuff where it will take people a bit to conceptualize how much of a game changer that is, but essentially it will enable people to not rely on any infrastructure because like there's so much banking infrastructure that's built that you have to like use, and all of a sudden the only thing you need is an internet connection. And then the rest is a protocol, and like with an internet connection, I can send you money, I can pay you, I can pay a seller of music, I can like as a platform give that money back to like the whoever like was on that platform, sold something on the marketplace. And that's huge, because what we hear also from international marketplaces, one of their key limitations today to grow faster internationally and get more customers around the world, if you have a really global approach, is actually payment rails, and like being able to make payouts to the sellers on platforms, much more so than like the buyer side. So I think that's one where I believe that there will be a lot of transformation next couple of years. We always saw like Mastercard, Visa going out with like settling, accepting USDC as stable coins as a settlement currency. So there's much more coming there. And the third thing, maybe from what Panagiotis said, he talked a lot about like APIs and platforms as kind of like the future, or like what has been happening in terms of transitioning. And so I do believe there will be kind of like the next evolution of that, kind of like, let's say, Money 3.0, which is rather than APIs and platforms, it will much more be kind of protocols. So it's almost like HTTP for the internet. There will be protocols, and then you rely much less on like what exact like API framework someone uses. It's almost like the open banking layer in terms of like the definition of like all the rules for all the APIs that have to be adhered to. That's the kind of next layer that I think the real innovation will happen on, like defining those layers, and then everybody plays. So it's like almost like one abstraction layer more from the kind of API and platform layer.
I will have a follow-up for that, which is basically what you are describing is that basically the same kinds of technologies are going to be available for different providers, including financial providers, but also providers from other industries trying to enter or expand into the financial market, or just trying to own the customer relationship when it comes to, for example, like big tech. But if the protocols are very similar and the access to the technology is pretty similar to all of the players, then what can be the opportunities for differentiation? Because if everyone has access to the same technologies, then it's much harder to create experiences that are unique to a brand or a provider or a service even.
I think it's already happening today. I think like now it's almost like the crypto world is now a bit of a weird one because most people understand it yet. They can't actually build it yet. But I think in traditional banking, like it's 99% of all services are plain vanilla. It's everybody's like offering the same services more or less. So actually the differentiation there is, I believe, much more kind of user experience, like as was discussed a couple of times. And then I think the other one that's probably going to play an even bigger role is brand. So obviously in traditional financial services, trust was kind of the main element that was talked about, but it's probably a bigger part of brand more generally. Like, what do you stand for? Like, why do I care about like having my money and my financial transactions being made on that platform rather than another one? But it's not going to be features. I do not think that's going to be a differentiator. Complete game changers. That's also maybe just to add to that one. So there are things that will be coming out like out of the crypto world, but again, like you don't have to care about crypto because again, it will be invisible. But like we're now starting to offer, for example, like close to like 10% of interest rate on stable coins, and so you earn more or less 0% on euros at the moment in Europe, and we can offer you, I don't know, 7-8% on a stable coin euro based on completely different concepts how the financial economy works there. And I think that's the kind of stuff that you will not look away from, I think. But there's very few of those.
This morning I saw research, Generation Z research, where there was a very important saying when the researcher asked the people, why don't they use electronic payments and why do they use cash payments? And what they said, that it was very surprising that I don't want my bank to see my financial situation. And this is a digital generation. And then the next question was, okay, but what other alternatives do you prefer to use? And the majority of these people said that I would use fintechs or neobanks. And they asked, okay, but what is the difference between the two? Because you do the same things on both platforms. And they said that they have a better UX. And last year, we conducted a survey where we wanted to know basically the changes which were indicated by the COVID. And we wanted to know what are the two most important factors which take significant role in the decision when you decide to buy a product of a bank or decide to be a client of a bank. Before 2019, speed and trust were the two main factors. So, and after 2019, trust, but trust meaning transparency. So the whole service should be very, very transparent, and UX were the two factors. So speed is not anymore a top two factor when it comes to choosing a service. And speed meaning that how fast the service is operating.
Because it's I guess it's becoming a hygiene factor instead of a decision point, right?
Yeah, it's a hygiene factor.
It's just something that you expect.
It's the basic. So and what was very surprising for me that for example, we have a banking partner who is operating a business where they have very limited number of services, and people love them. Why? Because they are transparent. They are transparent even in their financials. So for what do they spend the profit to? And they have a very transparent communication. Plus, they have a very simple UX. You will get what you expect in advance in a very simplistic way, and people do love it. And people don't recognize them as a commodity because there is this emotional band. This is the bank who takes care of me, who's always in conversation with me, and basically who provide those tools that I want to have, and they don't want to sell anything extra for me. Of course, at the end of the day, I will buy extra from them, but they are not pushy. So, and this is a very, very good example that without having tons of digital solutions, you can achieve this kind of partnership status if you're a bank with your consumers or customers.
Just a very quick comment to this one. I know that we have 1 minute to go. I think that my experience says that customers, especially the ones that are younger, they don't have an issue with sharing data. As far as they know that, for example, that they are getting something in exchange, and that this use is transparent. So it's very clear what they do with the data. That's I think I've seen this clearly, and I think this is going to be one of the key factors in terms of how you handle data and what you do with the data. And this is also going to spur innovation and make a difference. So that's my experience, and I think this.
Thank you very much. In the background, Fabiola is already pinging me that I have to close this discussion, but I will not. If you still have 1 minute, I would just ask one last thing in one word or a maximum of 2 words. If you would think about what you would say to a financial player at the moment to do to be future-proof, what would be that 1 or 2 words?
I would say adapt. Try to adapt, and you cannot do anything on everything on your own. So you don't have to build everything on your own. What I said before, you have to adapt, and you have to be able to create partnerships.
I would use the same words: adaptation and partnerships.
Yeah, maybe embrace agile.
Okay.